That year, I had actually done an early withdrawal of a 401k that was not reported correctly at that point. It was a substantial underpayment penalty, close to the tune of six figures. It feels like there's an entire industry built around taking advantage of people in this scenario.
There is literally an entire industry built on taking advantage because we know that settlement programs exist with the IRS. People use that, take it out of context, and make it seem like it applies to everyone.
Right.
And meanwhile, they can charge lots of money if it seems like it may apply to you, and then they're long gone.
So everything that you just said, like we were told the opposite previously.
All right, so today we're doing the Tax Leverage podcast. I'm Jasmine DiLucci. I'm here with Mark, and the goal of this podcast is to walk through an IRS situation and also walk through a business owner situation. So both. Today we're doing an IRS situation that the whole point is to help Mark here, and then as well as so many other people that are in this exact same situation. I mean, this is so common, and that's exactly why I'm doing this, because people don't get good help, and I want you guys to have the education to make sure you're not put in a bad place. So with that, Mark, take it away, and let's go ahead and give some context and kind of start with what happened.
I'm in a bad tax situation currently, and I have struggled for several years now to find any kind of good help that can give me at least a sense of direction on how to handle this correctly. In 2020, I filed my own tax return for the first time. I used TurboTax. I used their deluxe edition with their audit protection guarantee and having a live agent that will kind of assist and walk you through that process. I assumed I had a pretty straightforward tax return. That year, I had actually done an early withdrawal of a 401k to put down a deposit on a house that I was buying. And long story short, that was not reported correctly on my tax return. Fast forward to the issue itself, it was a several year delay before I was notified of that issue by the IRS. At that point, it was a substantial underpayment penalty, as well as a large outstanding balance. So, close to the tune of six figures.
Yep.
So that's why I'm here today.
Okay, perfect. So let's walk through it in detail. So you said this was 2019 is when you filed your own return.
I filed in 2020. I filed my return for 2019. Correct.
Okay, perfect. And so you filed it with TurboTax, and I know you said you bought the deluxe edition. So what came along with that, filing? Were they going to look at the IRS notice for you?
Correct. Yeah. So part of it was guaranteed accuracy, audit protection, etc. I thought that kind of put the bumpers up for me in case I made any mistakes or had to deal with the IRS in the future. My situation, unfortunately, didn't qualify for that. So I should have read the fine print. But underpayment penalties are not part of their audit protection. Okay,
got it. So even though there is a large penalty, do you mind telling us how much the penalty is?
Yeah, I believe the penalty itself, I think, was $16,000 initially, plus it accrues interest.
Right. Okay. Yeah. Okay. So you got a $16,000 penalty that's accruing by the day.
Correct.
And then basically TurboTax said, okay, because of the type of penalty, we can't help you.
That's correct.
Okay.
Yeah.
Okay.
Yes.
Got it. So then the timeline here, so we've got that for the 2019 return. And then since then you've filed 2020, 2021, so you're up to date currently. Okay. Yes. And any issues on any of those years?
No, ma'am.
Okay. Okay, got it. So we still just have this 2019 issue lingering.
That is correct.
Okay. So go ahead and walk us through what you have tried to do since then to resolve.
Okay. So the first thing that I started out was reaching out to TurboTax. The process was complicated. So they transfer you to different departments when you're trying to actually get to the guarantee portion of it. It was several months went by where that clock is ticking, and I couldn't get a final answer. So I think it was about 4 months after I initially reached out that someone finally came back and said, unfortunately, this doesn't qualify. We can't help you. You need to reach out to a CPA or a tax attorney.
Okay.
So the next thing I did was go to the CPA who typically had done our taxes without any issues previously.
Yeah.
who reviewed it and said, due to the severity of this and the potential consequences as a result, like, you need to work with a tax attorney, not just a CPA.
So it sounds like, I mean, just from that comment alone, it sounds like your CPA just wasn't too familiar with IRS notice disputes and issues.
That's correct, yes. I reached out to a tax attorney, and this is where it starts getting a little bit interesting, I guess. Said he was really confident. He said, hey, you know what, I can help you with this, like, no issue whatsoever. It's going to cost you, but we can make this go away. So obviously my wife and I are thinking, great. It's a $7,500 retainer. The estimated cost of the total engagement is going to be between $11,000 and $14,000. But given the overall bill, like, that's kind of a deal.
So he was implying, just to clarify, he was implying I can wipe this whole thing out.
That's correct.
Okay.
Yes.
Okay.
So the first thing, we signed a letter of engagement with the attorney, and he said, what we're going to do is set up an S corp in your wife's name, and then we are going to file for divorce. So we're not actually going to go through with the divorce. We're just going to file the paperwork. And what we're going to do in addition to that is set up something called an innocent spouse clause. And that's going to say that I made the mistake. It's my sole responsibility. My wife had nothing to do with it. He said, in the meantime, we will move everything that you have into your wife's name with the S corp. And the goal eventually is to put you into an uncollectible status. And you'll basically have to manage that for the next 10 years. Neither one of us had run a business.
Yeah.
We weren't familiar with how to do everything. And it was basically just shoved upon us to run the process with no guidance whatsoever. Ultimately, my wife and I sat down and said, this isn't right. It's complex. It's stressful. There has to be a better way.
So at that point, you decided 1 month in, you said, okay, something's not right here.
Correct.
And then you just let him know, hey, we don't want to do this.
That's correct.
Okay.
So he said, what we'll do is, for the work that I've already done, I'm going to go ahead and keep, I think it was $4,500, and I'll refund you the rest, and we will terminate the agreement.
Okay.
We weren't trying to get out of it. We were just trying to solve the problem.
Yeah.
And again, being naive, we thought we could by just calling or writing the IRS a letter and just saying, we admit, like, we made a mistake. It wasn't intentional. How do we fix this?
Yeah.
Unfortunately, it is not that easy whatsoever.
Yeah. No, it's not. Unfortunately, the IRS has a very specific way of working. I'm really surprised that a tax attorney, like, I mean, that's far out left field. Like, just, I mean, it sounds like you kind of already know that, but just like my view of it when I hear what happened there is basically, I mean, it's a level of fraud is like what he was telling you to do.
Yeah.
And I think it seems like it became more clear to you, but it's one of those things, like, you don't know what innocent spouse is. You don't know, maybe this is just the process the IRS goes through.
Right.
And so when I hear it, though, what he was trying to do, it sounds like, so there's a 10-year collection statute for the IRS, right? So it sounds like he's basically trying to find a way to wait that out by essentially, I mean, to me, again, I hate to use that word fraud, but it's like by fraudulently transitioning and hiding those assets from the IRS through the guise of a fake divorce.
Right.
Yeah. And so definitely, I mean, there's not just one step there where he's recommending to have malintent. It's like multiple phases there, because even innocent spouse itself is only a claim, like, even that is not legitimate because she was a part of it, like the funds were used to her benefit. She was aware of that, you know what I mean? Like, bought a mutual house, all of that.
Yeah.
So just kind of, that's incredible. Honestly, I've actually don't think I've heard a story like that from specifically a tax attorney. If that person was a very qualified individual, it's one of the first times I'm hearing that.
Yeah, and this person was highly recommended by other people who we have come to find out navigated that process successfully.
Wow.
So we started receiving notices, hundreds. Sometimes there were days where we received 20 notices from companies all over the United States with this claim that, hey, we can make this go away. The IRS settles for pennies on a dollar. You see all the commercials on TV. Those are the notices we were getting phone calls, you name it, like borderline harassment. I called the companies, and each and every time I would explain to them, here's what happened, here's what we've done thus far, can you help? And pretty much like textbook, they'd say, well, for $500 or for $1,000, we can do X, Y, Z.
Yeah.
Well, after having already spent money on it, I knew to say, now, like, can you help? Like, is there some kind of guarantee that you can do something? And if so, like, what would that be?
Yeah.
And nobody could tell us. Eventually, I found someone who recommended Jackson Hewitt.
Okay.
I wasn't familiar with Jackson Hewitt. They worked with us. They were great up front, very understanding, sympathetic to the point where, hey, this is something that's serious, and they can garnish your wages. We have 4 children. We have a life that kind of came out of the blue for us. They said, we can come up with something. We won't make it go away. That's not what your goal is. But we can be the bridge between you and the IRS. We know how to get in touch and how this process is supposed to work. So we talked it over. We agreed to pay them, I think it was $3,500. And they said, we'll get to work on it. Send us all of the documents. So we did that. It was professional. It was like a web portal that we could upload everything, where we had transparency. And so that was more than we had previously, and we both had hope. As soon as we made that payment, radio silence.
Oh, no.
They did assign somebody to us as like a client service officer, I think was the name that they gave her, who every once in a while would receive an email saying, just letting you both know we're actively working on it. But it didn't provide any detail. If we called, we'd have to leave messages. We never heard back. That was for about 6 months. In the meantime, the clock is ticking. And this is something that is on the back of my wife and I's mind nonstop, because we don't know what's going to happen. And to our knowledge, nothing's actually been done. And the IRS is thinking that we're just ignoring it. After about 10 months, finally we speak with somebody who is a licensed CPA or claimed to be with Jackson Hewitt, who said, we've exhausted every option. Unfortunately, given your current income, there is absolutely nothing that we can do. No settlement amount. What you can do is set up a payment plan, and we are authorized to do that on your behalf. So, we'll get that going, and that way at least it'll stop the collection efforts, and you're not going to have to worry about them garnishing wages or anything like that. They sent us an email. The payment was, I think the first one was $5,700 a month.
Wow.
Not doable for us. And so after a couple more back and forth, they said, good news. We worked with the IRS. We talked to them about penalty abatement. They sent us a couple forms that kind of explained what that meant. And then they sent us the paperwork that had a $300 a month payment option. We're looking at it thinking, great, we can do this. Start doing the math and saying, like, how long would it take to pay off this debt, and is interest still accruing? Well, come to find out, that $300 a month was good for 24 months, and then it ballooned after that. We let them know this doesn't work, and they said, well, in 2 years, just call us back and we'll figure something else out.
Yeah.
And since then, we have made that payment, obviously. I pay extra on it anytime I have the opportunity, but it didn't stop them from putting a lien on my home. So we were in the process of selling that house. During closing, when they did the title search, they came back and said, it's not going to happen. IRS has got a lien on the house. We hadn't lived in it very long, so there wasn't a lot of equity in it at this point. The IRS did finally agree to release the lien if we were to pay all of the available equity in the home plus an additional fee. So we had to come out of pocket again to pay against that. And that's where we are today.
Okay, and how long ago was the sale?
The sale was last October.
Okay, so not that long ago.
Correct.
Okay. And then since then, has it just been, have you been making the monthly installment payments of the $300?
That's correct. Yes,
And then when does the step up in the installment agreement happen to the like 4,500?
Be April of 2025, so next year.
Okay, got it. And then you haven't been in contact with anyone else, basically. You're like, we just don't know what to do.
We have not. No, I've been watching your YouTube videos thinking,
Uh-huh.
all right, if nobody can help me, like I'm just going to have to study from people who clearly know what they're doing and try to figure this out myself. So,
Well, I love that.
Yeah.
Okay. Well, my goal is literally, I'm going to walk you through exactly how I look at this and how I would handle it.
Sure.
So let me see if there's any other. So at this point, what happened with the penalty abatement? They only abated part of the penalty, right? Not that $16,000.
That's correct.
Okay.
Yeah. So when we looked at it after the fact, it ended up being about $900 is what they had removed.
Wow.
So,
Awesome. Okay.
yes.
Do you know, I'm assuming it sounds like they used basically that kind of first time penalty abatement, get out of jail free card.
I don't know what they actually did. And I think one of the things that like I wanted to convey was, like I know we made a mistake, but it feels like there's an entire industry built around taking advantage of people in this scenario. And that's been the most challenging part, is figuring out what information is accurate and what just puts you further in a bad spot than you already started.
Yeah, it is. Actually, you honestly identified it. There is literally an entire industry built on taking advantage, because we know that settlement programs exist with the IRS. People use that, take it out of context, and make it seem like it applies to everyone.
Right.
And meanwhile, they can charge lots of money if it seems like it may apply to you, and then they're long gone by the time they're actually working on the case.
Yeah.
So to kind of go through, I just want to give like a high level view of, like, it's in context of your situation, but just in general, so how the IRS works. So the settlement programs, they sound really awesome, but what they are is, it sounds like you kind of have heard of it at this point, where it's basically they're looking at, can you afford it? Right. So whenever you're disputing something with the IRS, it comes down to, I can't afford to pay this. That has to be the position. Okay, well, if you can't afford to pay it, then the next position is, okay, actually, I don't owe it. That's another position you can take. And then the final position, this one's very, very, very hard to get, so it wouldn't apply in your situation, would be like, it's not fair to make me pay it. So that does exist with the IRS, but it's very high burden. None of those like big companies or common companies are going to typically do it, because it's very hard to get past. But for example, it would be like, yes, we have $1 million, but we both have cancer, and we need it for chemo, and you would literally kill us if you took the money.
Right.
So something where it's just, yeah, we might owe it, but like health reasons, things that are like extremely critical that require amounts of money. So that's that situation. So that one we're going to take off the table. Really, for your situation, like if you came in with just, you hadn't gone through all of that, and you said, here's my IRS notice, what do I do? The first question we look to is the tax correct, right? Because if the tax is not correct, that's the first thing we go for. The problem is you did withdraw the money, right? So we know that the tax is correct.
Yes.
So you took out the money, you used it for a home, there is a small exception for like first-time home buyers, but even then it's extremely small. So really, like, the amount of money that came out and everything, it's not really gonna significantly impact that.
Sure.
As far as like removing the penalty, like regardless, the tax is there.
Yeah.
So, and also just to kind of like, we went through this actually before you came on, but the first thing I asked you to do was check your IRS transcripts.
Yeah.
So that's honestly my advice number one going forward. I know it's not going to fix the problem going backwards, but that would have solved this issue.
Sure.
So that's what, like, if I was telling someone that hadn't filed a return yet how to never, ever get in this situation,
Right.
it's to check your transcripts. And you should wait until May or June to do that, because then everything's popping up on the transcripts for the most part. Okay. And then when you would have seen the 401k distribution there. Right. And that's how the IRS actually knew about it, right? They didn't formally audit you. They didn't look into it. They just had it on file, that 1099-R, and they just automatically place it onto your return. And IRS systems are just so slow that they take 2 to 3 years to notify you, which sucks, because then the penalties and the interest have already accrued.
Right.
So that's how to avoid it for next time. But then as far as kind of right now, like what I would do, I think you've got basically, it does limit to 2 options, because your income is high, and that's what you've already been told. But essentially, unless you lose your job, and which could happen, right? Sometimes there are situations where you go down in income for whatever reason. Maybe you're transitioning. Sometimes you could go ahead and time it, but there would still need to be like an extended period of not having income, which is the worst situation. So, so the actual settlement, basically, I don't see any options to negotiate the debt down. as far as the actual tax, because it's accurate tax and you can afford to pay it per IRS calculations.
Correct. Yeah.
Okay.
Yeah.
So that we put to the side. And then the next thing we look at, can we get rid of the $16,000 penalty? I think that's the one big opportunity you have to at least try.
Okay.
I don't see a reason not to try, especially when you have nothing to lose, right?
Right.
All the IRS can do is say no. So what I'm going to do is actually give you exactly the form and like the guidance after this on how to do it. I think like if I were you, that's the first thing I would do. I would at least submit a reasonable cause and then say we acted in good faith, and you're basically saying, please just grant us this exception. It's not a guarantee, right? Which is why I also wouldn't recommend paying someone a lot of money to do it.
Right.
Because then you could pay for nothing potentially. Otherwise, if you submit it yourself, you have literally nothing to lose. And I'll give you a template. Like I have pre-written templates that I've used before. So you can just like plug in your facts.
Okay.
And so that's the first thing I would do, at least have a shot at removing the $16,000. And then the second thing is, I mean, it's an installment agreement, but it's fixing the one you've got. And again, fixing it honestly for low cost, right? So it's actually a pretty straightforward form.
Okay.
That because of the amount of debt you're at, you don't have to prove financials. You don't have to prove what you can afford to pay. You can just say, hey, I just want to divide this over to 72 months. And so is that, if you took your current debt and divided it over 72 months, is that something you can afford to pay? It's about like $1,200 a month.
Yes.
Okay.
Correct. Yes.
Okay.
No, we definitely could. And part of the equity that came from the sale of our last home did a significant dent towards the overall amount. And that was done after the initial installment agreement. So that was always my plan to kind of recalculate it.
Yeah.
But I didn't know that I could do it myself.
Yeah.
And again, like my wife and I were educated. We're just, you don't think about these things. So, no, yes.
Okay,
Long
perfect.
answer to your question.
Okay, good. Because I mean, that's the solution I would recommend based on what you've told me, facts thus far. It's let's try to reduce it, but let's not wait for that. Because the reasonable cause application will take probably like a year for the IRS to like full cycle of like review and then probably appeal it, since they usually deny it at the first level, appeal it, and then a lot of times they say yes. They hear your situation, they hear the things you've been through, and they're like, you know what? This person seems like they're trying to do a good job. And so that's worth, I mean, $16,000 is worth it. If you told me the penalty is $500, I'd be like, let's just forget about it.
Sure. Yeah.
And then the installment agreement, I'm going to give you the form and we'll help fill it in today.
Okay.
That you can literally just, I mean, I know calling the IRS is not fun, but they do answer their phone better today than they do with COVID.
Okay.
Okay.
Awesome.
And if you need help with that, I can help you too. But,
Okay.
But basically it's going to be as simple as calling them, having the form ready, submitting it. It's a one-pager.
Okay.
The only thing that I specifically see as an issue with the installment agreements, and this happens to a lot of people, where the old rules for the IRS used to be that you can't establish an installment agreement above $50,000 in debt without showing financials.
Right.
And so the agents will answer the phone and they think that's still the rule. It's actually not. It's not the rule. So they switched it during COVID to up to $250,000 in debt.
Wow.
So
Okay.
you don't have to prove what you can afford. You're able to just divide it over the 72 months. And then so I'm going to give you the IRM site that you would tell them if they tell you the wrong rule, to handle it yourself.
No, and that's awesome, because we were told previously by one of the other firms that we reached out to, the 50,000 rule, and they made us actually complete all of the documents and list the value of the vehicles and everything we had, which it took a lot of time and effort to do. And then they came back and went through it with us and said, private school, sorry about your luck. Like, that's not a necessity. And a vehicle that costs over X, sorry, that's a luxury item, doesn't count against it. So everything that you just said, like, we were told the opposite previously. So that's a big help.
Of course, yeah. But that's how I would address it. So it's literally, I'll give you, so the way I operate and work, right? Obviously we do a lot of this work too, but I'm trying to help more people at low cost because it puts you more in the hole.
Sure.
So what I have, I'll give that all to you today, but also I'll give you access to, I have like basically something I've built out, and you can call it a program, but it's basically like access to me. So as you're going through it, you'll have access to like videos I've already created, the forms, Q&A, and I have office hours and everything too.
Awesome.
Yeah. Yeah, so you can literally just like, it's simple. And it's one of those things, just having someone there in case you think, a lot of times it's like, it's based on not knowing stuff.
Right.
Not the fact that there's actually an issue, but the fact that you think there's not an issue, but that 1% chance this could be a problem, you have someone to ask.
Okay. Awesome. Thank you very much.
Of course, yeah. So that's how I would resolve your situation. And any other questions or anything?
No, it's just, like I said, like for anybody that's listening that has anything close, the amount of bad information is just, it's extremely overwhelming. And the time that it takes to figure out, and because I'm not a tax expert, I don't know what is the bad information until you talk to somebody else who then says, no, that's wrong, and you need to do it like this. Each of those things cost you money. So having somebody like you that's like a solid resource to point you in the right direction, like that's a huge help.
Of course, no problem. So if you are looking for a no-cost evaluation of your situation, I'm looking for more applicants. This is specifically for IRS problems. Maybe you've been through the ringer, you've worked with multiple people are telling you they can help you, but you haven't been helped. Or if you're a business owner looking for more of a holistic review, accounting, tax, even legal entities, those are the applicants I'm looking for. So go ahead and apply at the link below.